Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. It's a tinge of green across major indices. Midcaps, they are lagging today. But we did touch that 25,000 mark, but we've come off from those levels. But a lot of moving parts in terms of earnings, and that continues to come in.
You're absolutely right. After hitting the 25,000 mark, quite a bit of selling pressure. But today, after a while, we're actually seeing the broader end of the markets lag when it comes to the top end of the markets or the frontline indices. So that's one trend that we're seeing today. But quite a lot lined up on the show. Let's start off with the top headlines. Benchmark Nifty index finally tops the 25,000 mark. Healthcare and banks are key gainers, even as Realty and auto drags. Midcaps underperform.
Nifty auto slips nearly 1% amid muted July auto sales numbers. Ashok Leyland sees flat total sales on a YOY basis. The stock is down over 2%.
First, those solutions at a record high after the company raised the guidance for FY25 in terms of revenue. Birlasoft, however, continues to stay under pressure after a muted Q1. Sonata Software slips post Q1 results. Management tells CNBC-TV18 that AI is becoming an integral part of large deals.
KRBL slips over 7% after reporting its Q1 numbers. EBITDA is down 53%, while margins contract to 9.8% versus 17.8% on a YOY basis.
GTND sees its margin expand to 19% versus 7% on a year-on-year basis in Q1 FY25. Meanwhile, revenue rises 34%, stock gains over 5%.
Okay, all right. Those are the top headlines. But, we've been talking about mid-caps lagging today. So this is our segment, Mid-Cap Movers. We have Hormaz to take us through the mid-caps that are moving around in trade. Hormaz.
Plenty of movers in the broader markets, and I'll start off with those that are losing in today's session. Dixon Technologies is one of them. It snapped a 4-day gaining streak today. India Mart continues to sell off after its results. Titagarh also after the results is seeing a bit of a sell-off, and Navin Fluorine 3.5% lower in today's session. A lot of earnings reactions as well. Sonata Software, the top loser on the Nifty 500 today, 7.5% lower. Reddington, Birlasoft, Prestige Estates, all of them seeing a negative reaction to their earnings. But two stocks bucking the trend. The RPSG group names PCBL and FirstSource at record highs, both of them in today's session, 6.5%, and FirstSource 9% higher. Stocks doing well on the back of volumes. Jubilant Pharmova, Adani Energy, of course, after the QIP at the highest point of the day, now 14.5% higher, and of course Aster DM after the results doing well on strong volumes, and some bit of sell-off seeing in the PSUs as well. HAL is under pressure, as are REC, BHEL after the results, and BEL also not having a good day today. Back to you guys.
Thank you so much, Hormaz, for that. Let's now focus on Tata Steel. The company reported a mixed set of Q1 numbers. Our colleague spoke to TV Narendran, the CEO and Managing Director of the company, and began by asking him about the global steel pricing. Let's listen to that conversation.
Chinese prices have been a concern for the last year or so, ever since China started exporting almost 8 to 10 million tons a month. And I think that level of exports continues. China prices are depressed, but as you mentioned, at these levels, it's not sustainable. Chinese steel companies are already losing money. I think they're losing about $40 to $50 per ton on the HR coil at these prices. So it has to start moving up. And coking coal is not moving down as much as it should if steel prices have to stay at these levels. So I do expect that we are pretty close to the bottom.
All right, so that's heartening to hear. Let's focus on business then, and let's take the positive side of the business first. The India operations, fairly steady, EBITDA per ton more or less in line with what the street was working with. Give us a few details. You have Kalinganagar that's going to be commissioned in the next couple of months. What is the total volume growth you're looking at for the India business for this year? Because there'll be contribution that will be coming in from there. And also, given that there is some softness in coking coal prices, what is the outlook on the EBITDA per ton?
Yeah. So as far as volumes are concerned, the guidance we have given for the year is about 1.7 million tons coming out of Kalinganagar. We have another 200,000 tons coming out of Nilachal. For India, that's 1.9. But we are taking out 500,000 tons because we have a blast furnace, G blast furnace in Jamshedpur going for relining. So the net volume increase that we have guided is 1.4 million tons for India. As far as coking coal prices are concerned, like I said, it's stickier than it should be at today's steel prices. It's still around $220 because the liquidity in the coking coal market is not as great as it is in iron ore. So you typically see iron ore prices reflecting steel prices better than coking coal prices reflecting steel prices. And that's what we're seeing even today.
Okay, and what about for the past quarter? Coking coal prices, how much lower were they in quarter one if I compare it to quarter four? And for quarter two, how much lower will they be?
So I think for Q2 compared to Q1, we are guiding that in India it will be about $25, $20 to $25 per ton lower. And I think last Q1 compared to Q4 was about $15 lower. Yeah.
Got it.
Consumption. I'm talking of consumption cost.
Got it. Okay. All right. Fair enough. So that's about the India piece. What about Europe? The good news was the losses were lower because Netherlands has turned around. But UK is going for the entire realignment. So keeping that in mind, do you see Europe actually move into the green? Or do you think UK operations will continue to drag? And what about Netherlands? It only improves from here on?
So as you know, the Netherlands business suffered last year because of the blast furnace relining. The blast furnace came back on stream in February. So we've had the first quarter of full production after a long time. So that's why you see the volumes pick up in Netherlands. The markets are not great in Europe, so the spreads have been a bit lower than we had thought. But overall, obviously, Netherlands has moved from negative to positive. We expect Netherlands to stay positive EBITDA for the next few quarters at least and beyond. But Q2, of course, will be challenging for everyone because we are at the lowest point in steel prices the way we see it. UK, as you know, is going through major restructuring. We had guided that Q1 and Q2 will be significant EBITDA loss, which is what it is. But by the end of September, we would have closed the remaining blast furnace. We've already closed the 4 ovens in one blast furnace. And that will put UK into a neutral or a slightly positive operating EBITDA territory. But there would be, of course, one-off losses as we do the restructuring and we do the VRS and things like that.
Okay, so for the second half of the year, Europe is definitely going to be in the green as of current reckoning.
Definitely better than the first half, I will put it that way. And because there will be some one-offs, like I said. But on an operating basis, it will be in the green. Yeah.
Got it. And what about India? India is doing around 13,700. Give and take everything. Pricing, benefit of this, $20 of coking coal cost. EBITDA per ton improves?
No, there will be some compression because steel prices are still soft. Coking coal prices, we will absorb. We will get some of the benefits. So there will be some compression. But again, I look at Q2 as being the low point of the year. And hopefully Q3 and Q4, things will look better because we'll also have additional volumes coming in from Kalinganagar.
All right, let's focus on the balance sheet then. The net debt has moved up to around 82,000 crores because you've incurred around 3,800 crores of capex. With the capex that have lined up, I think it's around 16,000 crores. How do you see this debt number move on an absolute basis? And where do you think it peaks out? If you could give us an absolute number on the debt.
Yeah, so a lot of the movement just now is because of working capital. When you always compare March to June, most companies will show an increase because of working capital because you're typically hitting the lowest point in the year by the end of March. So there's a bit of working capital adjustment. Second adjustment is because as we shut the blast furnaces in the UK, we are shipping out slabs and coils from Netherlands and India to the UK to keep the downstream businesses running. So there's a little bit of working capital going there. But overall, what we've guided for the year is the net debt will be flattish, but the net debt to EBITDA will come to below 2.5. It was over 3, and it will come down to below 2.5.
Okay, all right. Net debt to EBITDA to sub 2.5. Got it. Let's also focus on this crucial Supreme Court verdict. Now, you all have gone ahead, Mr. Narendran, and put a contingent liability of close to around 17,000 crores. If in case there's an adverse scenario that plays out, and this is on a retrospective basis, so we'll have to wait for that judgment. But could you tell us if it is implied on a prospective basis, what could be the hit on an annual basis?
The contingent liability is something that has been on our books for the last many, many years. So every year, if you look at the annual report, it has always been carried. So it's not anything fresh. I think we thought it was good practice for us to be transparent about that. But having said that, the impact is far more than Tata Steel. And I think the impact is on power cost because coal prices will go up. Impact is on iron ore. Impact is on bauxite. So there is a larger impact across the economy, and that's a larger concern. On an ongoing basis, that what in the past the state had planned to tax, I think the impact would be about 1,500 crores a year. But honestly, we are waiting for more clarity on the ask as well, because laws were not notified in some of the states too. And so there's a lot of work which still needs to be done before we get to some specific numbers.
Do you think the probability of this getting enforced is low?
I don't want to comment. It's sub judice, so we'll wait to hear what the outcome from the Supreme Court is.
All right. You know, the other beat that I track is cement. A lot of consolidation is taking place out there. Over here, you have, the top 4 players that hold bulk of the market share. But there are a couple of assets that could come out. One is Mr. Agarwal's asset. The other one is NMDC Steel and RINL as well. In the past, you've said that you want to focus more on organic growth. But if these assets come up, is Tata Steel interested?
Now, preference is always for organic growth because we have the land now between Kalinganagar, Nilachal, and the Bhushan plant. We can add at least another 20 million tons. So we have enough land available to grow significantly with the existing assets. And you grow in the same spot, you help competitiveness as well because you spread your fixed costs over larger volumes. So that's our preference. So I don't think we look at all the options, but as of now, our preference is always for organic growth.
All right, that's the word coming in from Tata Steel's management. With that, we'll slip into a break. When we come back, we'll get you on more on the markets. We'll also connect with Mr. TV Mohandas Pai, former Infosys CFO. Infosys has received a GST demand notice. We'll discuss that and more. Stay tuned for that conversation. Welcome back. Well, Infosys has received a pre-show cause notice for a hefty 32,400 crore rupee GST amount, which the company counters saying it is fully compliant and eligible for refund against exports as well. What does this really mean? What could the implications be on this one? To discuss this, we have TV Mohandas Pai, former CFO and board member at Infosys. He's also the chairman of RN Capital. Mr. Pai, good afternoon. Thank you so much for joining us. Well, I went through Infosys's press release, and there are 2 things here. First, it's a pre-show cause notice. So basically, an audit observation sheet where officers issue observations and ask for some data. And second, they are talking about doing the payment in full, and it's for a branch office which is abroad. So ideally, there should be no tax in that. What is your take on this? Do you think this will get solved at the pre-show cause issue notice level already?
This is continuing tax terrorism to which India Inc. has been shown for the last 20 years. It happened in UPA, it happened in NDA. In 2014, Finance Minister Jaitley and the NDA manifesto said they will stop tax terrorism. The disputes were 4,25,000 crores. Today, the disputes have gone to 12 lakh crores. And see this document. This is a budget document. Taxes raised but not realized. What do they say? 1 year to 2 years, the amount in dispute is 6,58,000 crores. All right? So there's a deliberate attempt at tax terrorism for the last many years, and government has not been able to solve the problem despite this. Now, let me come to this case. Look at this case. There was a notice from the Karnataka tax authorities. The company said they went and met them and showed them the business model. What is the business model? You have a branch overseas which bills the client. The branch collects the money and remits the money to his overseas account to India. All right? And then you bill directly from here for anything that you do from here. All right? And the branch files a tax return overseas. There is no tax from the branch to the head office or head office to the branch because the branch does not provide any services to the head office. All right? They're 2 distinct entities created for a particular purpose. You could have a company there, a legal entity, or you could have a branch. That's how people work. And this has been how industry has been working. Large parts of industry have been working. This is a business model issue. And then what happens? After that, just yesterday evening, suddenly the media says tax evasion, 36,000 crores, alleged tax evasion. Then the company in the press release says, we heard it in the media, then we got the release. So who is doing what? So they read it to the media and create a fear and create something else. Then they send to the company for what? They could have called the company and said, we have some questions to ask you. Can you please explain what is your business model? Then what do they say? Oh, they had a branch. They have to charge tax. It has to be on a, they have to charge it there, then get a refund. Now, there is a company has said that there is a circular issued in June, which from the from the ministerial committee, which says very clearly that there cannot be GST from an overseas branch to an Indian company.
Sir, if I could just interrupt you there, the tax period mentioned is actually from July 2017 to March 20. Yeah.
No, look, I understand all this. The clarification issue to say it was never there earlier also, because it is very vague. Now, if you have a tax dispute, raise it within 1 year. You're raising after 5 years when the group of ministers or whatever it is has said very clearly that, this is not applicable. So what are you trying to? So issue a tax release. Look, I don't mind them calling a company, anybody, please do it. But why release to the media?
But I think Infosys, Mr. Pai, Infosys says they've already submitted all the relevant documents. So do you think?
Please read that. No, please read that. They went and met the Karnataka authorities and given all the documents, everything to them. And then DG Delhi issued this again. And this is a press.
So anyway, and yes, I do get that. And anyway, by law, you cannot issue two different notices for the same period, two authorities, right? So that anyway at the starters does not look right.
I'm concerned about one thing. This tax terrorism, why are you deliberately issuing things to the public to say alleged tax evasion when there's no tax evasion and hurting people's reputation? Why are you hurting people's reputation? Why are you creating this kind of a crisis? You could have called them over and told them, come and explain the business model, because you don't understand the business model. It's a business model issue. It's not tax evasion issue. But it's an alleged tax evasion.
So what is the way forward now for Infosys, or what is the team at Infosys planning to do?
Look, it cannot be held under law, is illegal, unconscionable. But you see, please remember the problem in the country. Taxmen can issue any notice, create any demand, do whatever they want and say, go in appeal. I have met them as CFO. They told me I got a tax target. I will issue the demand. You pay me and go in appeal, you'll win. And appeal takes 15, 20 years. This is tax terrorism at its worst. And it's been happening for many years. That is the challenge that we have to face.
Yes, I totally get you.
This is not going to impact the company. They don't have to provide anything because the pre-tax, they will explain. And, I'm sure, government, I'm sure the government will take note. I'm sure the NASCOM will come, because there is a business model issue and the circular is very clear. The law is very clear. I mean, this is nitpicking at the worst. And why are you doing it? What is the motivation for doing all this?
Yes.
That is what government should do. And why are you harassing companies? Today, business in India is living in fear. Business in India is living in fear. Tax rates, they announce everything. 60 to 70% of all appeals are lost. 60 to 70% of all appeals are lost.
Yes, we do get your point, and since it is just a pre-show cause notice right now, and the sources are suggesting company would just submit the documents. They've already, as you said, spoken to the Karnataka tax authorities as well. We'll have to see which way things go, but before that, of course, submission of documents on this particular thing will be very important. And as you said, this is a model which has continued. It was there in the service tax era as well, when a company had a branch office abroad and there was sharing of services there. But we take your point, and we'll of course keep discussing this. Thank you so much for joining us today with your take and giving us a sense of what is happening on ground as far as this notice is concerned as well. We'll do one thing, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action. Stay tuned for that.
Well, one particular segment of the market that's showing very interesting moves is actually the mid-cap IT space. Now, within that particular space, if you pull up the chart of Birlasoft, yesterday the stock fell almost 5% on the back of weak results. Even after the conference call, today you're actually seeing Birlasoft fall another 4%. In fact, it's the top laggard as far as the F&O space is concerned. The other stock, which is having differing fortunes is Firstsource Solutions. Firstsource Solutions declared its results a couple of days ago, and remember, the company actually upgraded the revenue growth guidance for FY25. On the back of that, the stock is up 9% today. But with that, that's all the time we have on this edition of Midcap Radar. Mutual Fund Corner when we return.